What is good, trading family? Wildcard in the booth, TB's on the headset, and we are live on a Friday that feels like the market's holding its breath at the top of a roller coaster. SPY finally cracked 776.81 on the 4th. Try this week, but that's the old high. The intraday all-time high is 779.34 from August 13th. Qs led the charge, up 1.17%. VIX is back down to 14.57. The appetite for risk is alive. But here's the hook. The tape reintroduced friction overnight. West Texas Intermediate crude is up 1.3% to 82.32. Treasury Secretary Bessent is out there talking about sanctions the world has never seen. Defense Secretary Hegseth says that blockade runs indefinitely, and there's a fresh carrier heading to the Gulf. This rally was built on oil staying flat, and oil just woke up and climbed. That's the show.
All right, before we go any further, quick housekeeping. Nothing we say today is financial advice. We're not telling you what to buy or sell. We're just two people trying to read a very weird tape. Do your own homework. Now, the futures are flat, but that's not a rejection. SPY at 777.86, basically unchanged in the pre-market. Records don't extend at 6 in the morning. They consolidate. The VIX at 14.57 is calm, but the pressure is building. So we're opening on a record high, but the fulcrum is already moving.
That's the whole game. A record high that needs the disinflation trade to survive. And the disinflation trade runs on oil staying calm. So when West Texas Intermediate crude pops on sanctions talk and an indefinite blockade, you have to ask, new high, now what? That's Act 1. I'll take that. Then TB is going to take the curve as the tell, and then he's taking the Saturday anchor. We'll close with the copper gauge. Let's get into it.
Let's start with that record. SPY broke 776.81 after 4 failed attempts this week. That's a real breakout. Qs led with a 1.17% gain. The VIX dropped to 14.57, the lowest weekly close since before the tariff escalation spiked. So risk appetite is there, but it's narrow. It's concentrated in tech and energy. The break ran on the idea that inflation is cooling, and that idea dies if oil spikes.
And oil is spiking. West Texas Intermediate crude up 1.3% to 82.32. That's not a rumor. That's Bessent on the wires, talking about sanctions that have never been seen before. Hegseth says the carrier group stays until further notice. That's an escalation regime, not a de-escalation pause. So the question for today and the weekend is whether the record holds if the energy complex keeps bidding. The tape is saying, I need oil flat. Oil is saying, good luck.
I want to flag something important before we go deeper. If you're making a call that oil's risk premium is the new floor, remember the show's own track record. About a third of our long oil risk calls have missed because de-escalation came out of nowhere. So I'm not saying you're wrong, but I am saying the counter case is that this is a headline spike and it fades if there's any de-escalation signal. No floor calls. That's the rule.
Fair. I'm not calling a floor. I'm calling a regime. June was the peace unwind. This is the escalation belt. The blockade is indefinite. The sanctions language is new. A carrier is moving. That's a different setup, but I'll keep my entry conditional. More on that later. For now, the record versus the fulcrum. That's the tension. The market priced a disinflation path. Oil is challenging that path. If oil stays bid into the weekend, Monday's open gets messy.
The curve is the tell. 2-year yield at 4.15%. The short end has priced out the hike. The Fed is done, and the market believes it. But the 30-year yield at 5.24% hasn't come down. That term premium is still there. The short end believes the Fed. The long end believes Cleveland Fed President Hammack, who reminded everyone that the inflation door swings both ways. That's not confusion. That's the market splitting the difference between a near-term pause and a long-term problem.
So the bond market is the only honest room in the building. The short end says hikes are over. The long end says term premium isn't going anywhere because supply and inflation risk are real. And that's before you get to today's PPI.
PPI is the live read today. Headline month-over-month consensus is plus 0.2% against a prior of negative 0.1. Core month-over-month consensus is plus 0.3 against a prior of plus 0.4. Year-over-year headline is expected to come in at 4.9% against a prior 5.5. Core year-over-year expected at 4.2 against 4.7. Those would be big drops. But here's the problem. The tariff machine hasn't hit the producer index yet.
Right. You've got 100% tariffs on drones, 25% on the rest. De minimis is dead after that court ruling this week. Copper Section 232 is still pending. So the producer price index we get today is still the old world. It hasn't priced in what's coming. The tariff inflation is being written today, while the market prices its absence.
And the fiscal side adds fuel. July deficit came in at $432 billion. Net interest is now the third biggest check the government cuts. And there's a $1 trillion defense budget with a Republican caucus that can't agree on how to fund the war. So the term premium isn't just inflation fear, it's supply fear. That's why the long end refuses to break.
That's the curve story. Now, TB, take the Saturday anchor. That's the thing that makes this weekend spooky.
Retail sales and Michigan sentiment land. Saturday, August 15th, not today. That means the market has to sit at a record high all weekend, holding a consumer print it cannot trade until Monday. That's the real tension. Retail sales headline whisper is low, consensus plus 0.1% against a prior of plus 0.2. Core retail sales consensus is plus 0.2 against a prior of negative 0.2. Michigan consumer sentiment is expected at 54.4 against a prior of 55.2. And inside Michigan, the inflation expectations are the TEL 1 year at 4.2%, 5 year at 3.3%. The consumer's front end already prices the tariff wall.
And then you've got Atlanta Fed GDPN, now at 5.8%. The model says the economy is ripping. Sentiment says the consumer is dreading. One of those is wrong. Saturday's print is the first swing at deciding which one. If retail and sentiment beat, the melt-up broadens out of top-heavy artificial intelligence. If they miss, the laggard discretionary sector finally gets its day, but for the wrong reason. Either way, nobody can trade it until Monday. You just marinate in the tension.
That's the weekend positioning. The tape can't respond. It just sits there.
And that's the show's spine. Start on the record, then the curve, then the consumer split, then copper. Let's keep moving. Earnings. Quick hit. There are no notable earnings on our calendar this week. Nothing. Workday popped 18% on an unconfirmed Silver Lake rumor. But that's a deal story, not an earnings print. Private equity, saying software is cheap. 10 seconds. Done. We're not going to manufacture coverage.
Right. Now, the economic calendar. Today, Friday, August 14th, the main event is PPI. I gave the consensus numbers. Watch the core month over month, plus 0.3 against a prior of plus 0.4. If that number comes in hot, the 30-year yield could spike and the record high gets contested. If it comes in cool, the disinflation trade strengthens and the breakout holds. Also today, United Kingdom GDP, consensus 0.4 against a prior of 0.6. That's a global backdrop read, not a market mover for us, but it feeds the dollar.
Then Saturday, retail sales headline plus 0.1 against plus 0.2. Core plus 0.2 against negative 0.2. Michigan sentiment 54.4 against 55.2. Michigan 1-year inflation expectations prior 4.2. 5-year prior 3.3. And Eurozone GDP Saturday consensus 0.4 against a prior negative 0.2. So even Europe is in the mix. But the U.S. consumer print is the one that matters.
The calendar is loaded, but it's backloaded. Today's PPI is the warm-up. Saturday's consumer data is the main event. Nobody can trade Saturday until Monday, so the risk is compressed into the weekend.
Sector rotation. Let's do the board. Leaders over the past week. Energy. The energy sector, ETF, up 4.9%. Technology. The tech sector up 2.94. Healthcare, XLV, up 2.39. Laggards, industrials, XLI up just 0.56. Consumer discretionary XLY up 0.30. Materials, XLB up 0.27. That's a narrow tape. Energy is leading on the escalation and oil bid. Tech is leading on artificial intelligence. Consumer discretionary is lagging at a record high. That's a warning sign.
If Saturday's consumer print misses, XLY becomes the story. It's already the weakest sector, and the consumer is the one paying for the tariff machine. If the print beats, money broadens out of that top-heavy artificial intelligence trade and into the laggards. The rotation is telling us that the market is not confident in the consumer. That's the tell.
International to U.S. Asia overnight, Nikkei up 0.59%. Hang Seng down 1.27. Shanghai Composite down 0.49. Kospi up 2.42. Korea ripping. Hong Kong bleeding. That's money picking sides. Korea builds the chips the world still wants. Hong Kong eats the transshipment weight from the tariff machine. Europe. DAX up 0.50, FTC down 0.27, Euro stocks up 0.16, FX, USD, JPY down 0.21, Euro SD flat. Dollar index, the dollar index down 0.24. No acute yen carry unwind, but the Bank of Japan remains the tail risk.
That Kospi versus Hang Seng spread is macro plumbing. Korea benefits from supply chain rerouting. Hong Kong gets hit by de minimis death and tariff enforcement. That flow feeds U.S. names, semis, and tech follow Korea's strength. Transport and trade-related names stay cautious. The dollar is quietly weaker, which helps risk, but not if oil keeps bid.
Now the portfolio hot news. The copper gauge. This is the closer. COMEX versus LM copper spread is pricing at 37% odds of a 30% U.S. copper duty by 28. Warehouse inflows are at a 12-year high. That's not a forecast. That's a position. Front-running is becoming real. Gold gets the headlines. Copper does the work.
Gold at 4409 is the receipt, not the truth teller. It's confirming the inflation and de-dollarization fear, but copper is the industrial reality. The Section 232 copper tariff is still pending. De minimis is dead. 100% on drones, 25% on the rest. That's an escalation regime, not a peace unwind. The market is betting that copper will get hit with the duty, and warehouses are stockpiling ahead of it.
Bull case. Supply chain rerouting. Domestic producers and materials names get bid. Inflation pass-through helps commodity companies, and the warehouse stockpiling is real demand. Bear case. If the consumer cracks, demand destruction hits copper hard. Global slowdown plus higher input costs squeeze margins. So, it's a double-edged sword.
Second-order effects, Korea versus Hong Kong flow is the first one. U.S. importers are stockpiling, which is why warehouse inflows are at a 12-year high. Energy and industrial input costs rise. Fed credibility on inflation gets tested. The names it touches, energy, the energy sector. ETF has direct escalation exposure. Materials, XLB, and industrials are mixed. Semis follow Korea. Transport stays cautious.
My book. I had in the energy sector. ETF. Call out queued for the open. I flipped it to conditional. No market order into the open. The plan is, either the energy sector ETF gives me a pullback that holds on live tape, that's ticket 1, or Monday opens green, and the consumer print confirms the melt-up, that's ticket 2. Either way, the stock gets pinned to a live level I just pulled, not a level from memory. I'm not buying the morning after a 5% week into an untradeable weekend. If the tape says no, I'm flat and patient.
That's the right call. The discipline matches the words. Side is simple. Apple sits underwater in my paper account, stop below my entry. That's the one position I'd defend if the tape cracks. No new callouts. The Wave Trader algo is quiet. 4 positions, Shopify leading, W and Tulo lagging. No new entries because prospective gain is under 5. Low conviction right into a record high is exactly what a system that doesn't chase looks like. Cash waits for Monday.
And that's the show. Let's close. Here's what we're watching tomorrow and Monday. 1. SPY 776.81 and 777.86. The breakout must hold. Lose it, and the record is a trap. 2. West Texas Intermediate. Crude, 82.32. Up. If oil keeps bid, the disinflation trade cracks. 3. Saturday retail and Michigan. Retail sales plus 0.1. Core plus 0.2. Michigan 54.4. GDP. Now 5.8 against sub-55 sentiment. One of those is wrong. 4. COMEX LME copper spread. 37% tariff odds. 12-year warehouse highs. That's the real tell.
Concrete levels, concrete events. If SPY loses 776.81 on Monday, the breakout is failed. If West Texas Intermediate crude holds above 82.32, the energy bid is real. Saturday's print sets the tone for Monday's open. Copper is the long-term position. Watch those levels.
That's the 4 for today. Records don't extend at 6 in the morning. They consolidate until the print lands. Then they decide. I'm Wildcard. He's TB. Keep your stops honest and your entries earned. We'll see you Monday when the market finally gets to trade the weekend. Stay sharp out there.
Good weekend, everyone. Do your own research. We'll be here Monday.
Locked and loaded. Peace.